straight away look at how the markets are trading in the last 25 minutes of trade. Remember, we've also hit the 26,000 mark yet again in the intraday session today. Seen some profit booking at those levels, but still hovering around 25,960 as far as the markets are concerned. A narrow band of a move is what we have seen through the morning trading session and up until the afternoon as well, holding up to the 0.6% mark for the Nifty as well as for the Nifty Bank that hovers around 58,060 odd levels, up by about 360 odd points. What else is buzzing in trade? Well, all the sectors barring pharma and media, they're all up and about in trade. PSU banks are the leading sectoral moves that we are seeing at this point in time. Oil and gas, real estate are the other sectors that follow with strong moves in trade today. On the Nifty, which are the top movers on the Nifty? You have SBI Life Insurance right after the earnings. The stock has moved up by 3.5%. You have Grasim Industries from the cement basket. Bharti Airtel, Eternal and Reliance Industries are the big names that are buzzing as far as the Nifty movers are concerned. Remember, these heavyweight counters are also leading to a recovery in the markets. But what's down? You can see Kotak Mahindra Bank as the top laggard. This is after the earnings have come in. And Bharat Electronics, Infosys, ONGC and some Adani Group stocks like Adani Enterprises and Adani Ports are also lagging in trade right now. But let's welcome our guest on board. Sharmila Joshi, market expert, joins in to share with us a fresh view on the markets at this point. Sharmila, warm welcome. Good to have you with us. Remember, last time we were speaking to you in the midst of the festive season, in the run-up to Diwali. And now I want to understand, when we are back after holidays, when we are back after that festive spirit, what is your understanding of the markets and this fresh attempt to again climb above that 26,000 mark? Will this remain an attempt, or this time around, do you see we will see a sustained rally above that level?
Yeah, we seem to be back with a bang, and as I personally think that this time it is a little more sustainable than what we were seeing earlier. A couple of reasons. I think that the way we are seeing the signals from the US economy that maybe there could be another rate cut there, the fact that our trade deals seem to be progressing along good lines. We've had that statement about H-1B visas come in. Also, parties from both sides seem to indicate that we could be closer to a trade deal. And I think now we can definitely expect that they are closer to a trade deal because it is many months since they sort of started discussion. And I think that, a lot of back and forth has happened. So that's another, like if that uncertainty gets settled, that will be another good sign. And overall, there seems to be some kind of sense that risk on trade is back. And I do think that this time, again, the result season has not thrown up any negative surprise. In fact, I would say that we can make a case that numbers could look better going ahead. So all things put together, it does seem that we seem to be ready to sort of attempt to make a new high. And let's hope that happens sooner rather than later.
Absolutely. So, Sharmila, help us understand, in this new Samvat year, what is going to be your core focus? Any theme sectors that you believe the outperformance can now come in from?
We've already started seeing the shoots, right? We've discussed financials that's sort of taken off. Autos have taken off given the GST sort of boost that they've got. One piece that hasn't really performed as yet is FMCG. Again, I think you can make a case out that the second half will be better because it will be backed by the GST sort of cuts that they've got, as well as the fact that we've seen a better monsoon, and that can mean, and in the past has meant better volumes, especially in rural India, where volumes have dipped for some of the FMCG companies. So you would expect, you've seen Nestle already sort of starting to move to higher levels. But the other results were a bit of a mixed bag, whether you talk of HUL or Colgate and so on. But that's a pack that I would definitely keep an eye on, not just FMCG, but anything in the consumption space. So that would be my sort of third sector to watch for.
Fantastic. Sharmila, remember in the run-up to Diwali, we were also talking about how gold and silver have consistently outperformed the equities, and that brought in focus to, see how in this quarterly earnings, we will see a lot of those jewelry companies to also perform. This time around, while there was some kind of a lag buying because people were waiting for some prices to cool off. But, in the later part of September, in the first half of October, a lot of people went back thinking that that the prices are likely to remain elevated, and they actually went back to the nearby jewelry stores and they bought gold jewelry. In fact, what we are given to understand is some of the statistics have already started to pour in. Say, for instance, P N Gadgil, that's actually talked about how their sales really soared in Diwali season in terms of the kind of jewelry sales they've recorded. They've recorded 606 odd crore rupees of sales during Diwali, highest ever Dhanteras sales at 277 crore rupees for them as well. They've also seen that their gold revenue has actually jumped by 74%. Their volumes are up by about 10% as well. Diamond sales for them have risen by about 54%. Silver is up by 90%. So they've actually seen a festive demand across the segment too. So I want to understand from you, how are you looking at now that the gold prices are ebbing lower from those record high levels? Last one entire week went by to understand, where will exactly this fall stop, or is this just a buying opportunity at large? How will you look at these jewelry companies, gems and jewelry focused sector, and of course gold financiers?
I think that let's talk of the prices first. Yes,
Yeah.
definitely, it did seem that there was a bit of a bubble, especially where silver is concerned. At least, the kind of reports that one was getting from the market seemed to suggest that there was a bubble there because there was a great demand for silver coins, and some artificial shortage seems to have been created. And I think definitely once the season is over and sort of reality returns, you will see a correction. That said, I think the way things are at the moment, if you were to compare this with a situation, say, 10 years back, the geopolitics of the world as a whole seem to suggest that there should not be too big a correction in either silver or gold. So I think that they are going to be sort of on people's buying list, because there will be sort of, every year, every 3, 4 months, there will be some situation somewhere that would make
Yes.
us think that the safety lies in being invested in gold. So I don't really
Absolutely.
think that the prices are going to correct too much. And again, I think, if you look at the data of the companies, everything that you read, what really surprised me very honestly was that apart from gold sales being up, you also saw significant sales in diamonds, because, there was
Yeah.
this whole thing that lab grown diamonds could be, sort of get more fashionable, and the value for real diamonds could go down, but we've not really seen that in the numbers of any of the P N Gadgil, whether it was Titan. I mean, you name it, and you saw that even uh, the gems business did equally well. So I don't really think that people are going to slow down, and their appetite for buying jewelry is going to go down. And as far as prices go, at least, there was a time when I would have never really recommended anyone to have a silver ETF or a gold ETF, but now I definitely recommend everybody to have a silver ETF or a gold ETF.
Okay. Okay, got that. So definitely has to be a part of the core portfolio. But remember, the prices could definitely be volatile in the near term. But eventually, once they settle down and once the entire greed and fear index is pointing out to stability, one can again look at it as well.